Testing. Good morning, everyone. Sorry for the delay. One of the said video unavailable. Just want to make sure that it's working properly for you guys. Hey, Rufus. Hey, John. Okay, it's working now. Alrighty. How's everybody doing this morning? Hey, Travis. Oh, boy. Hey, John. Well, folks, welcome to the tradingsyndicate.org, and I'm JJ, the ringmaster in this circus this morning. Well, another fine mess, eh? Boy, boy, oh boy, oh boy. As we say in Saskatchewan, this is a real dog's breakfast. Oh, this market. So, yesterday's Federal Reserve Day accomplished two things. Number one, it flushed out everybody who was a swing short. What it did was it took out these lows. You see, down here, that low and that low were the same. That poor low. Remember the poor low? When it took out that poor low, it took everybody who was long above it. You know, now you got to remember there's different time frames of traders and there's different size traders in this market. So, large size traders on these pullbacks, they will add to positions and trade around positions. Just general normal swing traders will get just flushed out of this. So the market flushed everybody out. We didn't take that low. And so it does two things. You see, this is overhanging supply. This area here, that's called overhanging supply. Okay? Now, most people don't think in these terms, but if you ever have to distribute a stock, when you take a stock up and you sell it to people, right, you get them long. And then when you try and go through these levels, sometimes they're all selling in your face, right? It's hard to move the price up because you have resistance. Resistance is caused by supply. So what we used to do is we used to flush the stock out, pound all these people out of their position, grab it, and then boom. When you go back through these levels on the way up, it's like a hot knife through butter. Trust me, I've done it hundreds of times. Right? The same thing happens in a regular market, and it's not because of manipulation. It's just because that's the way markets work. Okay? So this flush move that we had yesterday, what it did was it flushed out all of this overhanging supply that was weak. Right? Now the buying retention is another buying retention is something else that you guys don't really think about. The buying retention of these 4 days was pretty good because only a small percentage of that flushed into the bid. Can I explain it again? Sure. Okay. Trade maker. All right, you and I are working on a deal, right? Since it's kind of slow, we can talk about this. I hope you guys don't mind, but I think it's critical that you guys understand how markets work, right? So when you when you have a sell-off, right? When you have a sell-off in a market, you flush out longs, right? So if people are long, you're with me there, right? So say you're a swing long and you're looking for this, but you don't have a huge account, okay? So when the market takes certain levels, you're going to get flushed out. You're like, I can't take this, right? A drop from 63.98 down to 63.70, that's a fairly large drop. Can you handle 20 points? Say you were long 10 contracts at 64.10 and you were going to give it 10 points of room. Like you're a larger trader, trade maker. You still with me? Right? So when you flush that out, you flush people like that out, when you go back up, the people who've bought it here who are holding it, they'll still hold it because it's called buying retention. So when you go back up through it, you've taken out the sellers. You take these sellers and you flush them into a wholesale bid, and then you just boom. Right? And this is something you'll see this happen all the time in the market. That's why we have 1 day of selling, and then boom, the selling is done. Do you guys notice that? Now I did a video on why this happens, and it's been posted multiple times in the JJ video section of why markets always make new highs after a sell-off. It's the way the markets are structured. Hey Cisco Aloha, what's up, bro? So we have a situation where after a flush, because there's no continuous selling, there's no follow through, right? You have the markets rally to new highs because you've taken out the overhanging supply, right? So now that's one thing it does. So when you have a flush, right, you do number one, you take out the overhanging supply, right? Check. What else do you do when you have a flush? Well, people follow price blindly, and they will short the holy living crap out of the market under 6,400. So we've created a whole brand new set of shorts here. And then you rally the thing up and high close it because we had what? Facebook earnings or Meta or whatever, right? So now you have new short positions. Right? So basically what you've done is you've taken the market and you've given it a good, it's like when you clean a rug. You take it outside and you beat it with a stick, right? You beat all the dirt out of it, right? And then that's it. So that's what we've done. We've done it again. Now we're at an all-time high yet again. So I did some more levels here. Our target on this particular zone is 64.68. We got up to 64.59 quarter. So we can use these levels. I'll post them in the room. And today's the last trading day of the month. Right? I keep hoping for liquidation. We're not getting any. Right? It's a skyhook. Exactly. It's a Kareem Abdul-Jabbar skyhook, right? And if you don't know what a skyhook is, Google it. Right? It's like you throw the ball right up there, man. You cannot defend against this as a short seller, right? It is just nuts. Some do guess, John. Some of them have very overpriced analysts who tell them to short. Some are hedging. Uh, Takes all kinds, right, John? Think about the pilots that you trained, right? Think about the pilots that you trained. We have been in an uptrend for a long time, my friend. Sorry, we have been in an uptrend. I'll show you the weekly. We have been in an uptrend ever since, what, April the 21st. I don't think yeah, we're in an uptrend. It's a short squeeze, right? It's another summer short squeeze. I can't remember when was the last time we had that summer short squeeze. Wasn't it? Geez, I don't think it was. It was a few years ago, I think. Anyway, I'll go find out. But yeah, so yeah, we've been in an uptrend since April. Nobody wants to admit it, but we are, right? So for us, all we have to do is mind your business, trade your setup, right? If you're a longer term trader, it's very difficult. All you have to do is remember one thing, okay? These markets, until there is a material change, and there was a material change, right? Remember, this was a material change, folks, right? When we had this big flush. Do you see how this happened on a weekly chart? It's the same thing. What happened yesterday, right, is the same thing that happened in this time frame. This is the business that happens in all different time frames. And when people get short in the wrong location, they add fuel to the upward move. Does that make sense to you guys? It's the concept of leverage. Leverage is a big concept. In financial markets, right, if you know that someone's in trouble, right, it is your moral duty to take advantage of them and put them out of business. That's how Wall Street works, right? So, say one trader knows that the other trader is short, they will try and jam the stock or up and force the other guy to cover. Why? Because they'll go long, the other guy is short, they get him to desperately buy, and then they sell into him. Right? That's finance. It's always been that way, right? Always will be that way. Okay? So, do you guys understand that the same thing happens here? This flush is the same as the flush that happened yesterday at the end of the day. It's the same concept. You guys understand that? Yes? No? Happens in every single time frame. It happens because this market has limited supply. Right? Go look at the structure of how this market is built, right? And you will understand that stocks are not meant to be sold in this market. They're meant to be accumulated and marked up in price. So the the price of the collateral never goes down, right? That's why firms like Fidelity and BlackRock, they exist because they just gather assets, right? And they have trillions of dollars under management. They can't sell them if they wanted to anyway. So let's go take a look at this thing. So we opened inside yesterday's range, right? Now, yesterday all of this happened in the last hour of trading, and everybody goes to me, "Oh, JJ, why don't you use the 4 p.m. close or the Chicago settle?" Right? Well, don't you want to know what happens at the end of the day? Because M period closed here, and then the last hour, N and O period ran the market up all the way and high closed it up here at 64.25 and a half. Don't you want to know what happens at the end of the day, really? Or, because otherwise, and that's why people are short down here. Because they short and then they turn off their computers and then the market rips up 30 points. Think about it. You want all the information, right? So, anyway, that's that's you know, that's really the mechanical breakdown of what happened. Now, how do we trade this nonsense? Well, overnight inventory is long, okay? And while I've been talking, it opened and we missed the short down here. This was a little backfill short. Not the greatest short in the world, but that was really all we had to deal with. Now, we're doing a look below and fail of 54 and a half. So when VWAP's all the way down here at 47, we're in pure distribution, right? Pure distribution. The overnight point of control was at 43 half. It is now moved up, right? So we had a little liquidation after the point of control moved up. That brought in buyers because the market went right to that D and E low, stopped to the tick, and then reversed back up. So now it's working out 54 half. Let's see what happens. Let it just go back and forth and chop around. Today is the last trading day of the month. I am honestly looking at this move, right? Say I was taking a test short here. Where's my DOM? There it is, right? If I was shorting this, now, John, you're going to ask me, why would you short it, JJ? Well, what is overnight inventory? Is overnight inventory long or short? Do we have a poor high, John? Remember yesterday, it's the exact same situation, right? So tactically, you have sellers here. You have sellers at 56. You have sellers at 55. So if the market can stay under 54, it should go down and try and take out that K low and that C low when London opens, right? That's why you'd be thinking short, right? If it crawled above these two levels here, then you would change your mind. Does that make sense for you guys? How did Microsoft do in the after hours? 555. Wow. Look at that. And Meta 775. Woo. Well, there you go. So right now we're watching to see where the sellers are going to step in so we can make an informed decision. So you guys okay in Hawaii? No tsunami? That's good to hear. I don't think they had one on the West Coast either, so seems like everyone's okay, which is good. And we sit and wait. Any questions? This is like an insane short squeeze. Remember, we have what, 3 or 4 gaps underneath us that have not filled? Right? When a market gaps up, those are short positions. No questions? You guys are all ready for the weekend, aren't you? Yeah, I'm sure yesterday's. That's why you got to really be careful when you're trading around earnings and a Fed. Yesterday we had kind of a perfect storm, right? We had the Fed, we had Microsoft and Meta earnings, right? And also month end. So you had a perfect storm to trap people, right? See, the thing is, nobody really talks about market structure, right? Like, if you want to look at anything, look and see how it's built, right? So these markets are not built to be sold. They're built to be marked up because we're in a low interest rate environment. And how does Wall Street make its money, folks? How do companies like Fidelity and BlackRock and Vanguard, how do they make their money? By churning, buying and selling stock? No. They make their money by anyone? Bueller? Fees. Yeah, exactly. Right? They manage assets and they charge a fee based on those assets. So if the assets keep going up, the fees keep going up. Right? And everybody gets to keep their Gulf Stream. Trust me, these guys don't want to fly commercial. Do you guys ever see Barbarians at the Gate? Anyone old enough to remember that book in the movie? That Frost Johnson had like a plane just for his German Shepherd. You already have an idea where they're going to step in? Yes, John, exactly. And see, when the market goes above that line, right, it means the sellers here saw buyers. So they raised price. But you can see that they're having a little competition here. It's a little choppy. So if I was buying this area, say I'm buying 55, 54 and 3/4, right? Say I'm buying that area. Say I think, okay, you know what? The short's not really working, right? Just asked one question. Okay. So if I see that the market is kind of creeping up above those white lines, John, it tells me that the sellers are seeing bids, buyers, right? See, there were buyers here, so they stopped selling and they raised price, right? they're continuing to sell here. They let it breathe for a second, and then they all came back in and sold, right? So that's competitive selling, right? Once they work out this level and enough buyers come in, John, they will raise prices, and the next level will be 56. Does that kind of make sense? And you'll see this red line. This is the offer. See? It'll move up. And it's almost trying to coax people to pay more. So say I was long 54 and three quarters, 55, and I'd use maybe, now your stop, because it's a little choppy, maybe I'd probably use a 54 stop, right? And if you're feeling like a big spender, 53 and a half, right? You're going to put a sell order right at 55 and three quarter to front run. Oh, the fees. Yes. Yeah, so fees are based on assets under management. So if you have $1 billion under management, John, how these characters work is they charge 2 and 20. 2 is 2% management fee, so $20 million in fees, and they get 20% of the profits. So if you go from a billion to 1.5 billion in management, your fees go up to $30 million. You see? So let's see if I can get rid of a contract at 55 and three quarter. Nope. They traded there, but they won't take me. So someone's front running three quarters. Okay, I'm out one at three quarter. They finally took me. Now, we're back down to 54 and a half. I should have sold both of them at three quarter. Should have sold both of them at three quarter. London opens. All right, so I flattened the second contract. If it gets up over 54 again, I'll consider another long. I mean, sorry, 54 half. But right now, just sit and wait. Wait, wait to see if London can take out 52s right here. There, just tag the 52s. Now let's see if that brings in buyers. Yep, brought in buyers. But there's still resistance up here. You can see the sellers are just stepping in right here. Yes, that's like an old school trading thing, John. But it's not an A plus setup. Like a lot of what like I used to have a lot of friends who were scalpers back in the day, and what they do is as soon as they identified that there was a seller here, they'd go and they'd sell that level, right, and they'd put their stop above it. Hey, P Hunter. We could we could use a nice liquidation now, but we're not really getting one. Well, it's choppy like this. I just leave it alone. What I'm looking for to see where they come in and bid the market. I just want to see if these areas stay bid. I'm seeing bids at 53. See, the problem with this is we have unpredictable order flow, right? When you're trading at all-time highs, especially at nighttime, the order flow that's going to come in here is very unpredictable. I'll try a little short. I see a seller here. So I'm short at 53 quarter. I'll just put my stop up here. I'm doing this on the micro to test it. And if it starts lifting above 53.75, I'll scratch the trade. Right? My target is not really that great. It's, I don't know, 1 3/4. Really need that offer to see how the bid's moving down, but the offer stays put. That's annoying. There we go. Come on. Come on now. There we go. Maybe I'll go 52. Try and cover it at 52. If I don't get it at 52, I'm just going to take the bid offer. Yeah, I had to take the offer. Dang it. Ugh. Ran out of supply. But look how that offer is lifting, right? That's what I don't like. And I don't have the patience. Yeah, look at that. Every time this thing goes lower, it finds a buyer. We need a good, aggressive seller to come in here and just whack it. Like just hit it with a baseball bat. Oh, there's also something I forgot. What did I miss? You guys didn't even tell me that I missed these things. There are single prints in this profile. Look right here, right? There's a short position right there. A small one, but it's a short position, right? And that's just under that 49 target. That's why this thing's so messed up. Oh boy. Fun and games on month end. Not much to do here, folks. See, offers lifting. You can't get any relief for the short sellers yet. Brutal. Who's got? Can I define unpredictable? Yes, I can. So, John, large traders have rules on when they start to buy positions, right? So think, John, if you wanted to buy something, would you rather buy it at cost basis or would you rather buy it at 8 times cost basis, right? So when a market is trading at multiple times cost basis, like it is now, the kind of orders that come in, the larger buy orders that come in, are more often than not large short covering buy orders. Now, large short covering buy orders come in violently because sometimes they're caused by margin calls and they are conducted by margin clerks. Now, margin clerks trade like elephants. They have no finesse. They don't care. They'll just drop a market buy order for like 400, 500 contracts. And price will spike. So that creates unpredictable order flow. When a large institutional trader is working a big order, John, there is a level of finesse that he must use to get what they want at the price they want. So the order flow is much more smooth. Do you understand what? Do you see it's like smooth, like it's like they're conducting a symphony, right? But when a margin clerk comes in, it's like a child just screaming and yelling. So you get very unpredictable movement. You get large price spikes. Does that make sense? And it's more unpredictable at all-time highs because of the nature of the business, and especially at night. So if I was trying to buy 5,000 E-mini contracts to go long, right, I'd work the market in a certain way, but it would be smooth. It wouldn't be jerky, right? Because I'm trying to get a large amount, a large quantity at a good price. But if I had to buy in somebody, right, and I'm on a margin desk, I don't care. I just drop the order and go to the next order. There's absolutely no finesse. which creates unpredictable price spikes. And in a market that's got a thin order book, right? So if you look at, the order book is maybe 30, 40 contracts at every tick. So if you come in to cover a large order or drop a large order, the order book will thin and the price will spike. That's why it's unpredictable. Especially around month end, Fed, earnings. Okay. So we're just creeping back and forth. Not much to do here. Who do we have for earnings tonight? Right now, it's the problem is, Aries, there are so many kids waiting at every single one of those levels. Every time the pinata cracks open, they scoop up all the candy. Yeah, margin clerks don't give a damn. They don't give a damn. If you've ever heard of Walter Deemer, John, he's been around, oh God, since the 50s. And yeah, he and I joke about that all the time. Yeah, margin clerks have no finesse in trading. They're like the meter maids of the market. I'll try and find his quote about margin clerks. It's pretty funny. Yeah, they just want to give the ticket. Oh, thanks. Ferrari before the bell. Oh, Crab Apple is today. Crab Apple, Amazon, the Rainforest. Oh, and MSTR too. Oh, should be a humdinger tonight after the close. Get lots of rest. What's Apple look like? Apple's at that 209, 210 level. See if you can look at Apple. Look, you can see it. There's a constant seller in Apple right here. Right, it cannot get above. What level is that? 214 and a half. 215, so let's see if we can get over that. And MSTR, oh, it already had a run all the way up to 450. So we'll see what happens on that one. Oh, coin too, yeah. Thanks, Resto. Yeah, Aries, there's so many short positions in this market now. It is a pain, right? As soon as we get any kind of liquidation, look how quickly they bought it up yesterday. Okay. Go to sleep, Avalon. Yeah. Go to sleep. Get a good night's rest. We'll see you in the morning. If you guys don't have very many questions, I'll shut it down a little bit early because this is torturous. Just watching the POC move 3 or 4 ticks. Anyone have any questions before we leave? Exactly, John. Capital preservation. I'll let you folks go early a little tonight. No sense torturing you with this price action. We'll see you at 9 a.m. Come visit us at the Trading Syndicate. Thank you so much for being with us. And please trade smart. Remember, we've got a whole new month coming tomorrow. Thanks, everyone. Really appreciate you being with me through this very, very boring session. Thanks so much. Have a good night, everyone. And we'll see everybody in the morning. Bye for now.